profile. When you get there, this is what the net result you want. But we're going to go right here. In the input section, number of rows, 24, up and down, 70. Extend POC right, and then style. Okay, style. Volume profile. You don't need that. You see, if you click that, it shows all the volume. You don't need that right now for what we're doing tonight. I'm going to do market profile in multiple nights. I'm not going to do it all in one sitting. I have POC, that's called a point of control, and I'll explain that in a minute. Uncheck developing, uncheck this, and I have the different colors here. The main thing tonight, the main thing tonight is this, point of control. You see that? I'm going to make it thicker so we all see it. So really what I want you to focus on only is this red line tonight. So what market profile is, and I'll get back to that. If I could find something to draw with, that'd be great. I don't know how to draw with this thing. And I know somebody's in the audience going, I can help you, Chris Terry, I got you. Where were you when I needed you? Here it goes. Okay, cool. How do you get rid of that though? I guess you hit delete. Good enough. Okay, so let's look. So here's the market. Okay, the markets create these different, like that. All right, they create these bars going sideways. Let me see how I can get rid of this. Remove. Okay, there we go. This is gonna be fun. Yay. So here's the market in a whole day. Let's just say this is 1 day of trading. And in that day of trading, it's gonna have a bell curve, okay? It's gonna look something like this. All right, and in that bell curve, you're gonna have price bars where you're gonna have at some point highest volume. It'll be in there. And the highest volume will be 70% of the bar. So in here, as you could see, 70% is here to here. 70% of the volume is there. 70% of the volume is here to there. 70% of this day is here to here. You see that? So market profile tells you where all the volume was. And then where most volume is, you're going to have this. It's called that point of control. This red line right here, 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 this whole red line, this tells you right here, this is where all volume was 70% of all the volume was here. Okay, but most volume was right there. Most volume was right here. Most volume was in here. So when the day completes itself, you're going to see where the total volume was. So yesterday's session, which just ended according to TradingView, most of the volume was like right there. So what, and I've been looking at this for years, I've been using this for years, and it's really amazing in the futures market. Okay, but I want to go back and, matter of fact, I'll just go forward here. I'll show you. All right, for example, this was yesterday's volume from here to here. Yesterday's action in market profile in Bitcoin, all right? And most of the volume had occurred right up in here. For whatever reason, it looks like prices were here, right? But it's not. How it's calculated, this is where all the most volume occurred. And as you could see, it just kept on testing up here and failing, testing and failing. Even this on the new session, the market tested and failed. And right now it's underneath this area. This is acting as a resistance. Same as you see right here. See how the market, this came across? All right, this came across here. And if you notice, market popped above it, holding, and then ran up. But you don't know why it stopped up here, right? Watch this. Let's take a look. Here, see this? I'm just showing you things before I get into it, okay? So if you take the volume from the past, the highest profile, and you extend it forward, Okay. Close enough, right? And you extend it forward, you see that this became important. What happened back here is important today or yesterday. Here, okay, market created a whole sideways range, right? Sideways broke down, a fake out to the downside, ran up, and when it tested back down here, it held. And since then, it's been holding above it. You see how that works? So the markets love looking at prior areas of volume or value, right in there, right? Notice how this market acts around there. So let's go back. Let's go back. Maybe even look at the 60-minute charts. Okay. Let me remove. I'm going to remove all drawing tools. So let's just go back as much as we can. Maybe do something like this. Okay. So when we talk about the market going in a consolidation phase, that what they call that sideways line, this is basically it on a higher time frame. But on these smaller time frames, you just see how the market goes in these consolidation phases, and it tests these prior ranges. You can see here. Hold on. Okay. So this right here started back here. Okay. Started back here from this day, went forward. Okay, I want you to look at this now. Look what happened. How do I keep this on drawing mode? Stay in drawing mode. Okay, market profile. You see this? Okay, even when it came here, it still recognized what had happened back here. Okay, that's market profile. All right, it remembers, it looks back at where all that volume was in the past. Here, okay, shoot it across. You see how the market acts versus the prior, all that past volume shoots forward. So where most of the volume had occurred here, you shoot it forward and you can see how the price attracts to it. All right, you can see right here, shoot forward. See that? Uh-oh. All right, that's the one thing why you shouldn't be in drawing mode all the time, right? Boop. Okay. Okay. But as you see here, market happened to form here, tested down to this node here, what they call a node, and then tested back up and test back down, held. Okay, so markets test between these nodes, these value areas, these points of control. I love using market profile. I love using this. Right now it may be Chinese, or I'm sorry if you're Chinese, but some other language or alien. But when you start looking at market profile and how it relates to the current market, you look back and look at all the different volume nodes in the past, and you expand them forward, and you can see, for instance, let's just do a little bit more. Markets expanded, went into consolidation mode here, right? Well, if you were just to take this and expand it forward here, eventually when the market came back up here, see that? And this is called the naked point of control, because the market, once it shot across here, was never touched again, all this. Now you had consolidation here, down here, okay? It forms these points of control and becomes this barrier for the market to zip back and forth. But I want you to notice, okay? And I hope you guys are starting to understand what I'm talking about. We'll do this again. Don't worry, this won't be the only time. Here, you see how, and you don't even know why the market's hitting it. Wow, what's keeping the market down? What is keeping the market down? Okay, it's this whole volume node that happened here that's being shot across and is holding the market. You notice that right here, market finds resistance, right there. Then you have this, okay? So we start getting, watch. All right, you getting it? All that ugly consolidation in here. You start getting these multiple consolidations like this. So if you remember what we talked about in a triangle pattern, or what we call a sideways market, that at some point you're going to have that breakout. If you really look at it, here, if you really look at it, this whole area was holding it resistance. You could see here, right? Holding its support in here, eventually broke out, right? But look what happened here. You see that? So if you were to take the levels that I showed you on how to use them and start drawing out on your screen, and you look at the past, you could see how the markets on what they're doing. So let's go from here. Okay, let's just go from here. So market, let's see if we can do this like that. I like using these on a 30-minute chart also, by the way. I love using them on 30-minute charts. So let's take a look right here. Okay, is that how you do it? Yeah, okay. So this right here, the market eventually broke out, tested up past all these nodes, and now that became a support below. You shoot them forward. Okay, shoot them forward. So what are you seeing? Does that look straight to you? That don't look straight to me. Right in here. I'm talking to myself. Okay. So what do you see here, guys and girls? You see all these nodes where market profile had formed, and these points of control, points of volume, the heaviest volume, shoots all the way across your screen, and you lay it out for the future. You see that? If you were sitting here looking at where the market's going, and you're drawing, you know, Fibonacci lines, and you're doing all that other crazy stuff, you're sitting there going, okay, you know, market goes up, it must be the Fibonacci. You know, it must be the Fibonacci. That's why it stopped. It's the Fibonacci. You know what? Let me tell you about Fibonacci. You know what Fibonacci is? Fibonacci is a cool thing for guys to use when they meet girls, right? It's really, seriously, guys, girls, let's think about it. You go out to a club, a bar. I know a lot of people in our company like to go out, right? And you're talking to a girl, and she's like, so what do you do? And you tell her, I watch Fibonacci. I'm into Fibonacci. And she's looking at you like, wow, seriously. So the point is, it's not only Fibonacci. There's other things in the market that cause the market to stop going up and down. Swing highs, swing lows are important. But I want you to really take notice of market profile. Here's a node, right? Stretch that across. G, okay? Right here. You see that? Then you wonder why the market has hit as a magnet and is holding it. And this causes its line to shoot across. You see that? And you're wondering why. It becomes a magnet until such time it can really get away from it. And where does it go? Back to another point of control, another magnet. You guys see that? How about up here? How about up here? Okay. You see that, guys and girls? How about right here? Point of control, shoot it across. Right? So the point is of market profile is you're looking at the past and looking at where all volume has taken place and shooting it forward where you can find opportunity to trade the market or trade the market too. Meaning that if you have a target zone, if I'm looking right now at upside, let me show you something. So I'm going to draw this in, right? Let's just play a little game with me called Chris is going to have fun. Okay, there we go. Chris can draw. There we go. So, all right, I'm not the best drawer in the world. We can see that. But the fact is, this is forming that little bullish flag. Market broke out of a range, right? Bitcoin. And it needs to bust above, okay, above this area, right? So we did have some strong upside. We see the market tested the point of control, is backing off. If it can bust upon that, above that, yeah. Okay, here's what happens when you have everything in constant drawing mode. It constantly draws. All right, that's it. I'm not happy no more. Wow, we watched the CEO look like a fool. All right, so market, if it can consolidate here, looks like it's holding. Remember, it's above these point of control. It's above all this. The market has held all this past data is held here, is held here, it's holding here. Market went sideways, broke out the point of control to the upside, is now consolidating. I feel good that this market could just punch a little bit above 6,400, above this point of control, because it's holding right now and it's feeling like it wants to hold. Unless news comes out and drops it, Bitcoin, right? But should it get above that, the next target zone I'm going to watch would be here to here. Okay. From there to there. You see where you trade to? On where you would. So now when you're looking at the markets like Bitcoin or some of these markets that you feel are hard to analyze, it's really not that hard if you look at it and realize that the market's creating these volume nodes all over the place. It's creating these volume nodes for you to trade later on. Okay, here, market went sideways, right? All the way across. Look, it dipped down. When it came back up, look what happened. It's finding, you draw these lines out consistently. See, all you have to do is consistently draw them out going forward, and you can see, look at this. Gee, shocker, right? And I promise you, once you understand market profile, you'll understand the market. Okay, look at this. You can see it. It says it to you right in front of your face and in front of my face that all this consolidation happened here. We shoot it forward, and when price dips down, this is true resistance. This is true support. When the market's using its prior volume, heavy volume areas, what they call that point of control, that's where you really have, look at this. Is this crazy? All right. So understand something. Market profile is amazing. There's a lot that goes into it, but I'm giving you one of the first things you can use from this session going forward, where you can use it and find opportunity right here. All right. I hope everybody's seeing this and understanding this, what we're looking at. So if you don't understand it so far, you could just go back and watch the video again. All right. I don't want to spend too much time on this, but it's important that we did spend time on it so you can understand it. Let's take a little bit more of a look. Let's go here, here. So when I'm looking at market profile, I shoot these volume nodes forward. Okay. I shoot them forward. I want to know what's going on after the market has created these. I want to know what is happening. All right, take a look right here. All right, you get it? Okay, you see it, you understand? Even in here, same thing. All right, markets find resistance, support all around these volume nodes. And it's our job just to look at the past and see what happens in the future. Markets test these areas, it becomes real important. All right. When you have something like this where the market breaks out of a big range and you have your high and low of what we call a value area, and once it's out of there, then you just got that continuation. That's, that's the game. A lot of times you get that fake out, breakout, it'll fake out to one side and come down, or fake out down and come up, and that's normal for a market. But I want you to look at the past. Here, look at this. It's like you could just see it. All right, I wasn't even planning that. All right, see that? You're drawing it from the past. If you didn't did that, you would not know what's going on. All right, and yes, it's a lot of different lines, but you could definitely sit and just point out areas where the market's trading to. Like right now, I'm analyzing this, saying the market has held these volume nodes down here, put a higher low, it's broke out to the upside, it's consolidating and wants to continue higher. I would be bullish in here looking for a trade up to 6,600. Okay, then I'll worry about it once it gets there, or if it gets there. but I know that the market needs to hold above the 6250. Hands down, would need to. And again, this is a big area. You can see all this consolidation from here, all this volume nodes from here that shoots across. That's a heavy amount. You have to look at that as like a floor or a ceiling support or resistance. And yes, I know highs and lows are important, but again, looking at the past of what these volume nodes do, it'll put you on the right track at all times. So I hope that made sense. I know maybe been a little bit overwhelming. Hello. So got about 5 minutes. I have to get ready and pack. I'm going to be going to Detroit. I'll be meeting up with Alex Morton, Garrett Roberts,